Hey, hello everybody, Tim Knight, and haven't done a video in a while, and I thought it would allow me to express myself a lot more fully, just if I had the opportunity to do so. So I'm recording this 2.5 hours after the normal close. So the ES and NQ are open, and it is Tuesday night, and they are doing what they seem to have a habit of doing, which is giving the bulls lots of hope in the evening. It seems that it's like the shoe is on the other foot, because I remember all too well what it was like to look at the ES and the NQ and see some red at night and get excited about the next day, and it would really never work out. And it seems to be just the opposite now. I mean, we are up double digits right this second on the ES and the NQ. They may well be by tomorrow too. I don't know. I have no way of definitively saying. But it just seems to not really follow through that much lately. But be that as it may, I mean, I don't know what's going to happen next. I wanted to talk about the levels on this, and I'm obviously not in slope charts right now. I'm going to get there in a minute. Right now I'm looking at Thinkorswim, and I've got this is a 4-hour chart, and the levels. Let's just talk this through. So here's the ES, and we climbed and climbed and climbed, and then it peaked. It's actually off your screen right now, but it peaked on, looks like, the 21st of September, and it started weakening, and the real fun started around October 9, and the important break was right around here, right around the 10th. It just hot knife through butter. So crashed, well, miniature crash, and then it rallied beautifully right up to the underbelly of the things that it broke, then fell even harder and rallied almost as high, and this is when I was most nervous right here, and then very recently it beat a hasty retreat. Now the opportunity for the bulls and the risk to the bears is of course right there, which would be this inverted head and shoulders pattern. And if we hold above 2712, the longer we hold, the kind of more dangerous it gets for the bears, then we have every opportunity of this being a basing pattern. And I know a lot of people are thinking from a seasonality perspective that's exactly what's going to happen, because we're heading into a very bullish time of year, and a trade deal might get announced, and God knows what else. So until and unless this horizontal is broken, the bears are quite at risk. So this is the basing pattern to watch. Now, should we break this, boy, life gets a lot easier. But you can see we've got a nearly 100 points of opportunity, so to speak, for the bulls to just go ripping right back up to the kinds of levels which twice they've managed to do. So this is the level to watch. Now I'll mention that the NQ, if I can type it, the NQ has already failed. You can see here that we've just been making this progression of movements downward, and its own left shoulder has already been exceeded to the downside, because hundreds of billions of dollars are already gone from just a few stocks: Apple, Amazon, Netflix. So this is much, much weaker, even though, as I said earlier, it keeps making these little late night terror runs. So even as I sit here, the NQ has gone up like almost 80 points in a very short amount of time, in just a span of a few hours, for no particular reason. So anyway, something to watch closely, but particularly that ES level I talked about. All right, well, let's look at my own creation here. Let's bag this Thinkorswim stuff and go to good old slope charts. So let me just hit on a few key indexes here. Here's the Dow Jones Composite, and here is the channel we've been in, and we for a few days actually broke that channel, but we're back within its confines now. And once again, talking about the risk for the bears, just pretend these few bars didn't exist. We're essentially now at the low portion of this channel. This is kind of where it should, putting that in quotes, reverse. And you can see quite plainly the inverted head and shoulders in its own form right here. And so pushing back toward this level, which is quite a ways away, is the risk. Looking at the percent R, it's not exactly primed for that kind of thing. As you can see, we actually have just crossed lower on this. So that's a little encouraging for the bearish lot. As far as the NASDAQ composite, and I want to emphasize this, nowhere that I can recall, I may correct myself later, have we broken any long-term trend lines. So as many hundreds of billions of dollars have been lost in the NQ already in the NASDAQ, the uptrend is still intact. And the uptrend being defined as this line from March 9, 2009, even at its lowest, but right here on the 29th, it did not even come close to breaking that trend line. And it's got to do that before we can really start jumping around on the table. So we're kind of in a no man's land right now. It's been rather range bound around 72, 7400 thereabouts. It's going to take something bigger to, we're past the earnings season, we're past the latest Fed thing, and the something bigger for the bulls would be some kind of like really plausible earth-shaking trade deal. And something plausible for the bears, something meaningful for the bears, would be complete repudiation of a possibility of a trade deal or some other geopolitical shocker. It's going to take a lot of oomph for either side to just like grab the baton and start running, because right now we're kind of in a state of equilibrium. The small caps have certainly broken their shorter term trend line. You can see here how they broke their channel and did a eye-poppingly amazing job of tagging the underbelly of that now broken channel. It's just astonishing to me. And just, nothing up my sleeve here. The anchor points are here and here. It's not like I anchored it to this and are pretending it bounced away. No, those are the two anchor points, and this is the reversal. I mean, if you get an electron microscope, you might see a violation, but it is extraordinary, even to my eyes. The S&P 500, we are, go away you, we are light years away from long-term support there. We did a little bit of damage and let me correct myself, I beg your pardon. This is like long-term support, back to like World War II. We did do a teeny bit of damage to the March 6, 2009 support, so that's pretty cool. As it is now, here's the inverted head and shoulders I talked about. Let's throw down another line just to make it clear. So this is, let's just lay it on the line here, 2710 on the cash. We must break that in order to dispatch with the prospect of an inverted head and shoulders. But here again, percent R, we are just approaching a cross down point here, so that's in our favor. So I'm kind of aggressively positioned. On a scale of 1 to 10, I'd give myself like a 7 in terms of aggressiveness. I've got 80 shorts, about 200% leverage, so about a 7, 6.5, 7, something like that. Anyway, I hope that helps, give you some insights or ideas, and thank you as always for coming by, especially to my beloved premium subscribers who keep this place running. Bye-bye.